Hello, everyone, and welcome. I'm Ron Aimlin from SBM St. Louis, and today we're going to talk a little bit about banking and lending. With us today is Bryan Selzer. He's the Vice President, Business Banking Lending Team Lead at Enterprise Bank and Trust. Bryan, thank you for joining us today.
Absolutely, Ron. Thank you very much for having me. I'm looking forward to the conversation.
Yeah, well, let's dive right in. COVID has affected so many businesses in so many different ways. Tell me about how COVID has affected your business clients. I mean, what are some of the things that they're sharing with you? How are you trying to help them through it?
Yeah, absolutely. I think you hit the nail on the head right off the bat. No one was unaffected, right? Let's get that out there first and foremost. The way you were affected varies pretty greatly by industry, as you can imagine. To give an example, if you're in the hospitality industry, your business was pretty decimated for quite a while and is now still struggling to come back, but there are definite signs of life. If you're a disinfectant manufacturer, for instance, well, your business did the exact opposite. It boomed. And so the way we handled those clients was completely different. The hospitality industry, it was all about how do we get you through this? What do you need? What can we do to help you get the capital that you need to keep your business, your doors open, and keep your people employed, quite frankly. And PPP was a very big part of that. The disinfectant company, on the other hand, it's more how can we get you the capital you need to meet the demand? So there was a lot of collaborative back and forth with, we need to buy this piece of equipment, we need to expand this line, we need a new building, that kind of stuff. And it worked out very well for both parties, obviously, when you have a good banking relationship. And then it extended to companies in the middle too, right? So you've got companies that might be service companies, and the biggest challenge they faced was, well, now we have to send everybody home, and now they have to work from home. And can they do that? And I think by and large, I'm hearing that it worked very well. So many of them are considering making the telecommuting option permanent. Well, that also has another ramification with the commercial office market. And that has yet to be felt, but everything's sort of feeling its way out. And we expect over the next couple of years that in general, things are going to be back to where they were, but it's going to take some time. And the biggest thing that I'm hearing right now, quite frankly, is finding talent is the hardest thing that companies are dealing with. They have open positions. They want to hire for, front office, back office, whatever it is, and they can't find the right people for the job.
Yeah. Well, as we head into these final quarters of 2021, the economy is certainly doing much better than it was this time last year. What's your outlook for finding capital? If a business owner's out there and they're searching for capital, because you pretty much laid the groundwork where these companies are at. I mean, some of these companies that weren't affected very much financially through COVID, I mean, they're probably wanting to really ramp up and grow right now. They're going to want to really ride this economic wave. And then those companies like hospitality who are just trying to get back into it, they're going to want they're going to need help just trying to maintain the status quo until they can get it, so they can really ride the economic wave as well. So what's your outlook for capital moving forward?
It's out there. It's very much out there. It's available. Banks in general, I would say, are in a better position than they could ever have expected to be coming out of a pandemic like we did. I obviously can't speak for every bank, but I can speak for us. We are actively looking to lend to virtually every industry if it's the right fit. And I think that's key, is it has to be the right fit between the bank and the client. Beyond that, there's programs out there. There's more programs out there right now for companies that are trying to get back on their feet or are trying to expand than I've seen in the last decade. SBA comes to mind, for instance. There's a lot of SBA programs that are out there. Everybody knows PPP is currently exhausted, but there's other things out there. 7A has been expanded. Some things have been changed within the 7A program, for instance, and things are available. They may take some time to get it done. So start early would be the best advice I can give you in that regard. But they're there and the money will be there.
Has the lending underwriting standards, lending criteria, has it changed in the past year? At least I know you can't speak for other banks, but for your bank, has anything changed? The amount of collateral you need or credit scores, has anything changed in the underwriting standards?
Not really. If anything, I would say it's maybe even gotten a touch more flexible, might be the right way to say that. And I don't mean that in a bad way. I mean that we understand that 2020 was an anomaly. It was an odd year in almost every respect. And so there are accommodations sort of being made within the underwriting and the decision-making process for, was 2020 the new normal or was 2020 the one-off? And in almost all cases, we're viewing it as the one-off unless there's reason to believe otherwise. And the example I can give you for that actually goes back to PPP. In most cases, a loan being forgiven would not be considered accretive to cash flow. It would be considered sort of a one-off gain, and we wouldn't add it back to cash flow. But with PPP, it was very different because companies were required to keep those employees on and maintain those expenses. We're actually adding the PPP loans, even if not forgiven in 2021 to show on the income statement, we're actually adding that back into cash flow for 2020, just so we can get a better picture of where somebody might have been.
Makes sense. Makes sense. For those thinking about finding capital, what's the best advice you can provide them?
Find the right bank and the right banker. That is probably the number one thing. If I had to say that companies make a mistake on, they go to the first bank they see, or they go to the biggest bank they know in town, or the biggest name recognition. That's not always the best case. You need to find the right banker, first of all, the right person who's going to handle your day-to-day relationship. It needs to be somebody that you can trust, somebody you can talk to very easily, and somebody that demonstrates an interest and a knowledge within your industry too, for that matter, is important. I would be the first to tell you, I don't have industry knowledge of every single industry out there, but I have a bunch of them that I know enough about. The second thing I tell you is they need to show an interest in your actual company and you during the sort of, getting to know each other process. If they're not interested right up front, that's going to become pretty apparent if they don't, ask the right questions or seem to want to actually know your company. The next thing is the bank itself, right? We actually teach through our Enterprise University course program that's available to anybody. I'm going to plug that real quick. We actually teach a course that's called What Banks Look For. And one of the main tenets within that course is you need to find the right bank based on size, if nothing else. You don't want to be the big fish in the pond and the bank can't grow with you and they can't provide the capital you're going to need 2 years from now. On the other hand, you don't want to be the little fish in the big pond where you're not going to get the attention just because you don't provide them enough business.
Yeah, and I think it's important for all business owners to really focus on building that relationship with bankers, because as I was telling you before we started the recording, that a lot of business owners came to us during the COVID crisis when they were trying to get PPP loans, and they were doing business with some larger banks and they didn't have a real relationship with a banker there. And they were pretty much a number through the whole entire experience, which was stressful enough as it was, but not having someone you could talk to who really understood your business made the whole situation even more stressful for them. So I can see when bankers say, it's really important to build a relationship with your banker. You want to really have them understand your business and what you're going through and what your numbers are. That might have sounded like, just banker talk before COVID, but once COVID hit, people, I think, really started to take that advice in and understand what the bankers were talking about.
No, I think that's exactly right. You hit the nail on the head there. We've been preaching that for a very long time. We want to know our clients. We want our clients to know us. We want to get together at least, if absolutely nothing else, on an annual relationship review and go over everything, make sure everything's right. Make sure I know what's going on in your business and I can prepare for what may be coming from you that you're going to need from me. I want to form short and long-term financing strategies. I want to avoid the situation where a client comes to me and says, I need this $500,000 piece of equipment next week. Well, that's probably doable. But if I'd known this was coming down, I would have had a lot more options on how to get that done and could select the best possible program for you. So there's a lot of things that I think are important when you're building the relationship, but the biggest one by far is just being open, being honest, being upfront, both, and it goes both ways. I need to be open and upfront and honest with all of my clients, and then they need to be that with me. Our president and CEO is fond of saying, are you on, to us as the bankers, are you on the list of the first 5 people that they would call when a major thing happens in their business? And the answer is you better be, as the banker, because if it's a really good thing that happens, then hopefully they want to share that with you and let you know that, hey, I'm not going to need that line of credit down the line. On the other hand, if it's a really bad thing, they need to know that they can call me and that I'll be there to help them get through it.
Yeah, that is, I love that line. That's fantastic. Bryan Selzer, he's the Vice President, Business Banking Lending Team Lead at Enterprise Bank and Trust. Thank you very much for sharing your thoughts with us.
Absolutely, Ron. Thank you for having me.